would think that's be the same, but there's a big difference in those terms. When you hear pre-qualification, that's basically just a rough estimate. That means you called into a lender, you gave them some general information. You said, "Hey, I make $1 million a year. I've got 5 million in my bank account." And the lender said, "Okay, they looked at your credit score looks cool. All right, I can pre-approve you contingent upon me verifying this information," basically. So basically, they gave you a pre-qualification saying, if this information is accurate, you can get pre-qualified for this amount. That's not very strong in the market, right? So you want to get a pre-approval, and a pre-approval means that you've been actually vetted, you've been verified. They've reviewed your information, they've looked through your information, and they know exactly what you're qualified for based upon the actual documentation. So make sure that you go through that process so you're not wasting your time or anyone else's. All right. Little known tip, you can shop around the lenders, and I encourage people to shop around to lenders, right? Reason being is shopping around the lenders may save you some money. Like, not all lenders are the same, they're not all created equal. You want to make sure that you find a lender that you feel comfortable with, that's going to communicate with you properly, and is going to make sure that you are good throughout the process. So shop around, see what fees are, see what fees are involved, because they all charge different fees. When you go for a pre-approval, they're going to give you a loan estimate. It'll have the numbers on there. You can bring that back to me and we can review it. And we can make sure that you're going to get the absolute best deal that you can possibly get. So encourage you to shop around. It's not going to hurt you credit wise. It's only one ding to your credit when you're shopping for rates. So don't feel like that you can't do that. Shop around.